Welcome back to TradeGlo Crypto. In this video, we're trading Bitcoin live with one lot, which costs around 22,000 rupees. Now, let's execute the trade. On the 5-minute chart, Bitcoin looks bullish and is approaching a breakout level. So, we're taking a long position with one lot. And now, we've executed the order using 1 to 200 leverage. Our total capital stands at approximately 22.4 lakh rupees. Risk management plays a key role in trading. If you trade crypto, you already know how volatile Bitcoin can be. That's why we always divide our capital into 14 to 15 parts. This helps us manage risk effectively and trade calmly with clear targets and stop losses. We started with 10 lakh rupees, and in just 3 weeks, we grew our account to 22 lakh rupees. Once we hit 30 lakh rupees, we plan to withdraw 20 lakh rupees. We hope this helps you understand the importance of risk management. Price formed a solid support level after several failed breakdown attempts. Every time the market dropped into that zone, buyers stepped in and rejected it with strength. What's happening here? This is the market's way of shaking out the weak. Retail traders, the ones with no plan, are selling every time price dips into this zone, thinking it's about to crash. But the pros, hedge funds, institutions are buying. They're absorbing that selling pressure, and we see it in the chart. Quick recoveries, shallow pullbacks, and volume backing each bounce. This is accumulation, the prelude to a big move, and we're not about to miss it. We draw our support zone, marking the exact area where buyers have held the line. This isn't a random line. It's where the market's shown its strength. We're not guessing. We're observing. Patience is our edge. We let the market compress, watching the range shrink. The candles are getting tighter, volatility's dropping, and volumes easing off. This is the calm before the storm, and we're ready. We're not just looking at candles. We're reading the market's intent. Each rejection at the support tells us buyers are in control. The increasing volume confirms it's not just retail noise, it's institutional demand. The tightening range is a signal that volatility is about to explode. We've seen this setup before in Bitcoin, consolidation followed by a breakout, and we know how to play it. Our job is to wait for the market to confirm our thesis, not to force a trade. Trading Bitcoin is a psychological war. Right now, the market's testing everyone's discipline. Weak traders are panicking at every dip into our support zone, dumping their positions into the hands of pros. They see price touch this level and think it's over, selling at the worst possible time. But we see the truth. Those rejections aren't weakness, they're strength. Buyers are eating up every sell order, and the chart proves it. Shallow pullbacks, quick bounces, and volume holding steady. This is how institutions build positions, and we're trained to spot their moves. We're not guessing what's next, we're observing. The market's like a poker game, and we're reading the players. Price is compressing, the range is narrowing, and the tension's building. Most traders lose it here. They get bored waiting for the move, or FOMO kicks in. Our job is to wait for the signal, not to chase the noise. This is where discipline separates pros from amateurs. The market's designed to trick you, to test your resolve. It wants you to act on emotion, fear when price dips, greed when it spikes. But we don't play that game. We stick to our process. We've seen this setup before. A strong support zone, repeated rejections, volume building, and a tightening range. It's a recipe for a breakout. Patience isn't just a virtue in trading, it's a weapon. We've been there early in our trading journey, and we've learned the hard way. This isn't about babysitting candles, it's about preparation. We're not hoping for a breakout, we're planning for it. Risk management is non-negotiable. If we enter long on the breakout, our stop loss goes just below the breakout zone, tight, logical, and calculated. We're risking a small percentage of our account, keeping our exposure controlled. No emotional stops, no winging it. Our target? The next resistance area, where sellers stepped in during the last push. This gives us a risk-to-reward ratio that makes the trade worth taking. High reward, low risk, clean setup. We're not gambling, we're executing a plan. We're not using indicators here. No moving averages, no RSI, no MACD. Just pure price action and volume. Indicators lag, price leads. The candles, the volume, and the market structure tell us everything we need to know. We've marked our support zone, our breakout zone, and our target. We've set our alert and defined our risk. Now, we wait. This is the hallmark of a disciplined trader, not chasing, not forcing, just preparing. A strong bullish candle smashes through our breakout zone, closing with conviction and volume spiking. This is our signal. We enter long, stop loss, set just below the breakout zone, target locked in at the next resistance. The market's moving and we're in. Price surges fast, confirming our thesis. This is a good sign. Momentum's on our side. But we're not celebrating yet. Breakouts often retest the breakout zone and we're ready for it. Sure enough, price dips back, teasing the level we just broke. Most traders would lose their cool here, closing their position or moving their stop. Not us. We watch the retest. The dip is shallow, volume holds steady, and price bounces. This confirms the breakout's real. No fake out, no trap. We're still in. This retest is critical. It's the market's way of shaking out the weak. Traders who bought too early or without a plan are getting stopped out now, feeding the move. But we followed structure. We waited for the breakout, confirmed by volume, and were positioned perfectly. The chart's showing strength, clean bullish candles, steady volume, and no signs of exhaustion. We're riding the wave, but we're not getting cocky. The market can turn fast, and we're staying sharp. Price keeps climbing, and we're watching every candle, every level. No bearish divergence, no signs of weakness, just clean, strong movement. We're managing the trade, not just sitting back. At each minor resistance, we check how price reacts. Is volume holding? Are pullbacks shallow? So far, everything's textbook. Momentum's driving the trade, but we're not letting our guard down. Most traders screw this up. They see price moving in their favor and get greedy, pushing their target further, or they panic at the first pullback, closing too early. We've seen it all. Traders blowing a winning trade because they didn't stick to the plan. That's not us. We mapped our target at the next resistance and we're sticking to it. If the market gives us a reason to adjust, we'll consider it, but only with evidence, not emotion. As price approaches our target, we tighten our focus. Momentum's still strong, but we're watching for any cracks. No bearish signals yet. No long upper wicks, no volume spikes signaling a climax. The structure's holding and we're letting the trade play out. This is where patience pays off again. We're not itching to exit just because we're in profit. We're following the plan, letting the market hit our target. Others panic when price dips, closing their positions at a loss. Not us. We stay calm, letting the market do its thing. We know that when price coils like this, it's only a matter of time before it breaks. Then, bam, price hits our target. We exit booking 55,700 rupees in profit. It's a clean win built on structure, timing, and discipline. This isn't luck. This is what happens when we respect the process. Let support hold, watch price compress, wait for the breakout, and manage the trade without emotion. We didn't chase, we didn't overtrade, and we didn't let fear or greed take over. That's why we're banking this profit. Let's reflect on why this worked. First, we identified a high probability setup. The repeated rejections at support, the stronger candles, the rising volume, all pointed to accumulation. We didn't act on a hunch, we waited for confirmation. Second, we had a plan. We marked our zones, set our alert, and defined our risk and reward before entering. Third, we stayed disciplined. The retest didn't shake us, and we didn't get greedy when price surged. We followed structure, not emotion. This trade is a reminder of what separates pros from amateurs. Most traders fail because they rush in without a plan, panic on pullbacks, or move stops emotionally. They chase every move, overtrade, and let the market toy with their emotions. We don't. We wait for clean setups, execute with confidence, and manage with logic. That's why we're walking away with 55,700 rupees while others are licking their wounds. This Bitcoin trade isn't a one-off, it's a blueprint. The process we used here works across markets, timeframes, and setups. Identify a strong level, watch for accumulation, wait for a breakout, and manage the trade with discipline. It's not about fancy indicators or secret strategies. It's about price action, volume, and patience. We don't need a screen full of moving averages or oscillators. The market tells us everything we need to know if we know how to listen. Why do we skip indicators? Because they lag. Price is the truth, and volume confirms it. The candles at our support zone showed demand. The breakout candle with spiking volume confirmed the move. The shallow retest validated our entry. Every step of this trade was driven by what the market was doing, not what an indicator was guessing. This is how we keep it simple and effective. If you're watching this, take this lesson to heart. Trading isn't about action. It's about waiting for the right moment. Most traders lose because they're too busy trading to trade well. They jump into every setup, chase every candle, and let emotions run the show. We don't. We wait for the market to align with our plan, and we execute without hesitation. That's the edge that keeps us profitable. If this breakdown helped you see the market differently, hit that like button. Drop a comment below and let us know what clicked for you. Maybe you've caught a similar Bitcoin setup or learned something about patience. We love hearing your stories. And don't forget to hit the subscribe button and turn on notifications. Keep practicing, stay patient, and let the market come to you. And make sure you join our Telegram, where we share our live trades. The link is in the description. See you in the next video.